Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand all the latest updates of the stock markets, the way the sectors and the stocks are moving in trade. At this point in time, we are halfway through where the day has started on a somber note. It is seeing some deep cuts as far as the benchmarks are concerned. We'll get you to understand what is really happening in the markets and what is the way forward for you and what should be your investment strategy. All of that with an expert too. But first up, a quick check as to how the benchmarks are trading at this point. 150 points of a cut for the Nifty right here, 18,271 as of now. 0.8% of a decline is what you can see, but there's definitely some offtake from the lowest point of the day. We did see the Nifty making a low point of the intraday levels at 18,200 or thereabouts. The look at the Sensex as well. There's a cut of 469 odd points right there, 61,336. That's the level at which the Sensex is also hovering near, about 0.8% lower in trade today. But you can clearly see in the last 15 minutes odd, we have seen that uptick from the lowest point of the trading session, albeit still deep cuts being seen across the board. Talk about the broader markets, the mid and the small caps also falling in tandem with the benchmarks, down by 0.8%, both for the mid cap and the small cap 100 index as well. Look at the sectors now. All the sectors of the Nifty are down deep in the red, led by losses that are being seen in the metals pack. That's actually seen a sharp fall from yesterday's rise that we had seen in the markets. It's a complete reversal of sorts for the metals pack today. The realty space is seeing a cut of 1.5% odd. The PSU banks are dragging again, 1.16% down in trade. Autos are moving in the slower lane, 1.3%. So all those stocks that were moving higher yesterday, they've actually seen a reversal of all those gains in today's trading action. The FMCG is down, the pharma is down, you name it, and all the sectors are down in the trade. Talk about the Nifty breadth between the advanced decline ratio, clearly in favor of the bears at this point. 48 stocks of the 50 stocks of the Nifty deep in the red today, only 2 stocks sustaining in the top green ones. Let's look at those 2 stocks that are holding the fort despite the overall somber market. It is Adani Enterprises and TCS, the only 2 stocks of the Nifty 50 index that are up in the green. Rest of the stocks deep in the red. Which are the ones that are dragging the street the most? It's Hindalco, UPL, Eicher Motors, HUL, Tata Motors. So you have a mixture of metal names and auto names and the FMCG counters. They're down by over 2% odd in today's trading action. Look at the India VIX. That's the index that you need to watch out for. That's seen a spike of 5.5% today. 14.2 levels is what you can really see. Let's welcome our guest for the day. Nilesh Jain joins in from Centrum Broking to really help us understand and make sense of this deep cut. Nilesh, good afternoon and thank you so much for taking the time out. What do you make of this sharp cut? We do know that most of these cues have actually come from across the globe. We saw the Wall Street slipping for the 4th straight session. We saw the Asian markets crash, and of course part of it has to do with the Bank of Japan move on the yield as well. Your thoughts on the kind of crash that we've seen, about 500 odd points on the Sensex today, and can this go deeper than this?
Very good afternoon to you, Sakshi. Well, you have rightly mentioned these cues are coming from the global markets. Internally in Indian equities, I don't see any major, worries that so far. Numbers were, on a positive side as far as quarterly numbers were concerned. And looking at the global market, where Dow has corrected for the 4th straight session, and that is basically is causing the worry. Now, looking at the overall structure of the Nifty index, which is moving towards the levels of its 50-day moving average, which is placed at 18,100. And our markets so far have shown resilience. If we look at the 2022 so far, we have outperformed the global market. Now, today as well, we are witnessing a small recovery from the lower levels that basically indicates there may not be a major correction going forward. And 18,100 could provide some sort of a support on the lower side. Any correction could be a good opportunity to make a fresh entry on the long side. On the higher side, 18,500 is the 21-day moving average resistance and also a psychological barrier for the Nifty. So overall, we expect the Nifty to oscillate in the range of 18,000 to 18,500, whereas Bank Nifty, although we are witnessing relative outperformance and 40,000 is a psychological support for the Bank Nifty, we expect a pullback in the banking space as well towards 43,300 to 43,500. Lastly, volatility index spiked 5.5%. That basically one should keep on radar. If it breaches 16 level on the higher side, probably that may trigger further sell-off going forward. So watch out for IVs. Currently, it looks very much in the comfort zone for the bulls.
But you know what, like, I'm looking at the Sensex, and from the highs that we've seen 3 weeks ago, the Sensex is down by about 2,400 points. Now, it's a sharp, downward move that we've already seen. But would you say down 2,400 points, is this a time to look at some bottom fishing for the investors, or can more pain be there in the offing and one should be absolutely cautious at this point? What is your suggestion to the investors?
Well, Sakshi, we started with the point that this fall is basically led by the global market, and our internals are basically looking very strong. And looking at the recent the correction that we have seen is kind of a healthy correction that we have already witnessed, and we are moving towards the support zones. And from here, I would advise to go stock specific and sector specific long position. Whereas if you look at on the sectorial front, Nifty IT index, where we major correction seems to be over. There may be another round of sell-off that cannot be ruled out, but I think it's a good opportunity to make a fresh entry on the long side and add in the portfolio. And apart from that, Nifty Auto Index, we have already witnessed a good correction over there as well. Financials, I think that's the particular space which is likely to outperform going forward in 2023. And at current level, I think it's a good opportunity to make a fresh entry, a staggered manner. It should be bought in a staggered manner. And Sensex, I think it's a good entry level at current level.
Right, absolutely. You know what? What is interesting is that despite the overall weakness that we are seeing in major sectoral indices, the Nifty Bank, the Nifty Metals, in fact, the realty as well, FMCG, auto, all of them are down in trade. But there are some sub-sectors that are actually showing some smart moves despite this overall weakness. And one space from that is the paper stocks that have been buzzing in trade. Let's look at some of the stocks right there. JK Paper, West Coast Paper up in trade today. JK Paper is up about 5.5% odd. Sesha Sai Paper, that's up to. Tamil Newsprint is also up in trade today. There's Satila Industries that's up in trade as well. Imami Paper, Orient Paper, all of these stocks are up in trade. Guinness Paper also about 5.5–6%. Ruchira Paper is up about 7% odd. There's Sri Rama News that's up by 7% odd as well. So these are the kind of paper stocks that are actually buzzing in trade today. Nilesh, your thoughts on this entire basket? This again is a space which has been extremely cyclical, historically. Your thoughts here, and should the investors really keep an eye out on this space now?
Right, Sakshi. In fact, if you look at a majority of the paper stocks that you have just highlighted are trading at their respective all-time high levels. If we look at JK Paper, the previous all-time high levels is somewhere placed around 450, and it is on the verge of a major breakout from the same. So overall, yes, paper stocks are looking very strong on the chart. High top and high bottom formation can be seen on a couple of stocks as well. So the stock that we are liking from this basket is particularly JK Paper that looks strong for 500 on immediate basis, and going forward it may touch the levels of 600 as well. Rationale being it has given a fresh breakout from a symmetrical triangle formation on the daily time frame. And apart from that, if you look at Padamji Paper, that particular counter is also looking positive for 56 to 58 in the short term. And lastly, West Coast Paper, that is another counter that we are liking from this particular basket. And on the higher side, the previous all-time high levels this particular counter has made was 650, and at current level the risk and reward looks favorable for at least minimum 650 should be tested going forward. The stop loss should be placed near about 520. So looking at the structure of these particular paper stocks, I think the momentum looks strong, and it is likely to outperform going forward.
Right. Most of these paper stocks actually belong to small and medium, mid-cap companies, and the market cap is also on the lower side only. But I wanted to understand from a long-term perspective, if someone wants to really form a portfolio of some of the stocks from this basket, which are the stocks that you believe over a long run can actually turn into large caps as well, and therefore they warrant an attention from a long-term perspective too?
Right. So in this particular basket, we are very much comfortable on a particular counter that is JK Paper, and the kind of run up that we have already seen, I think going forward it is likely to outperform. The market cap is near about 7,500 crore, and going forward, I think the kind of move that we have already witnessed that is showing that this particular counter has some inherent strength. And on the higher side, the target that we are expecting this particular counter to test could be 600. That could be the conservative to aggressive target I would suggest for 600 sort of levels on the higher side. And in this basket, the first stock that we are liking is JK Paper, followed by West Coast Paper.
Okay, JK Paper and West Coast Paper, the two stocks that are on top radar from the paper space by Nilesh. So keep an eye out on this in case this space interests you. Do keep these stocks on your radar as well. Nilesh, stay on with us. We'll look at the kind of stocks that are buzzing in action. And for that, my colleague Tanya Aneja is with us. And you know, she has a list of all those stocks that have been buzzing on the back of some news flows as well. Tanya, take it away.
Absolutely, Sakshi. So let's start with the losers first. So PTC shares, they are again under pressure today. Reports suggested that public sector undertakings were looking to sell their stake in this particular company. And the company also said that it has entered into an agreement with Bhutan's electricity utility firm, Druk Green Power Corporation Limited, to supply 600 megawatt power to the neighboring country during the winter season. So this stock is in focus today. And then we have IRCTC as well. So LIC has bought an additional 2.27% stake in this firm. And this year, it will buy with this LIC's shareholding in IRCTC has increased to 7% from 5% earlier. Then we have shares of Dabur India as well. So shares opened lower after 16.5 million shares changed hand in 5 bunches, while the buyers and the sellers are not known. But according to some experts, promoters of this company were looking to sell a marginal stake. So Dabur is also in focus today. Just Dial as well, down around 2% today. And now Reliance Retail Ventures, that is RRVL, the promoter of this company, is likely to sell shares of this company via open market sale to comply with minimum public shareholding norms. We have IRB Infrastructure as well. So IRB Infrastructure developer shares were up to the tune of 3% today after the firm said that its board will meet to consider a proposal for stock split on January 4th, 2023. Shares of Singer India as well. This stock is also in focus today, and the shares were up to the tune of 5% after the board of directors approved the preferential allotment issue of 7.48 million equity shares at a price of 76 rupees per equity shares. Now, this will help the company raise almost 56 crore from its investors. Back to you.
All right. Thanks a lot, Tanya, for sharing all these updates. Nilesh, any of the stocks that were discussed just yet on top radar for you as well, or anything that interests you?
Well, Dabur looks very strong. It has not performed very much in the past. And looking at the today's correction, I think it's a good opportunity to make a fresh entry. It is trading well above its 200 exponential moving average. On the upside, the immediate target could be 600 and position target of 650 is very much intact. Stop loss should be placed below 560.
We got to know that this was perhaps his last pick in his portfolio as well. Do you track this stock at all? What do you really have to say to the viewers right here on Singer?
Which stock could you please come again?
Singer.
Sakshi, I don't track this particular counter.
All right. Any particular stocks that you would want to share for all our viewers as stock recommendations for the day?
Right. So we are liking Indigo, and the kind of recovery that this particular counter has witnessed from the levels of 1700. I think it is heading towards 2200 as a positional bet. Immediate stop loss should be placed below 2050 and target of 2200. So we are liking Indigo. And apart from that, we are also liking Balrampur Chini from Sugar Pack. That particular counter has also taken off its falling channel breakout. On the higher side, the upside target that comes around 410 to 415 in the very short term. Stop loss should be placed below 395.
All right. From the sugar space, it's Balrampur Chini, and from the aviation space, Interglobe Aviation. That's the one that's on top radar. Keep those stocks in mind in case you have any stock recommendations you're tracking. Then definitely track these two stocks too from Nilesh's basket. Well, thank you so much, Nilesh, for being with us on this show and sharing all those insights from the markets and from several sectors and stocks that we just spoke about as well. Quick check on the markets as we speak. Well, as we wind down the show, there's a cut of 507 odd points. Again, we are slipping away away, 61,298, the current level for the Sensex, 18,263, down 156 odd points for the Nifty. Down day for the markets, clearly everything, it's a broad-based sell-off that you're actually witnessing. But will we actually see a recovery from here? And for that, you'll really have to keep in check the 2:33 p.m. move that we have been witnessing for the last many days now. Keep an eye on that too. Many thanks for joining us on this edition, but do stay tuned on to Business Today TV for a whole lot more news coverage from the world of business and stock markets. And don't forget to subscribe to this channel. You can also stay connected with us through all our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in onto this edition. Well, the primary market buzz is nowhere near over. Nearly 2,000 crore